Okay. All right. Hello, everybody. Can you hear me? Everybody, guys, can you see the chart? Everybody on the chat? Thanks, Adinda. Sound is okay? Then let's start. It's 5 o'clock, 21st of January, 2016. First of all, how are you, everybody? From 1 to 10. How are you doing, guys? From 1 to 10. I need some feedback to know that I'm not speaking to a wall. Okay. We like to know how much the feedback. I can see my screen right now. Okay. I'm testing the delay to see, guys, because delay for me it's a bit it's not good for me because I do a lot of feedback. Okay, it's like 1 minute or so. Okay, I'm gonna start anyways. Okay, guys, so today we have some news from the ECB. We have some dollar news also as well. Basically, it has been a very, very, very interesting day. I can see that the delay is very, it's like 5 minutes, but it doesn't really matter. So, hi, Mr. C. Hi, everybody, and hi, the people that know me. Gonna start already, okay, guys? Sorry, it's the first time for me here on the Google Hangouts. Um, Human beings, we are habit, so it's a bit strange for me. Okay. So first of all, thanks FX Street for having me here as always. Thanks a lot. And thank you everybody that is with me here with me, willing to spend some time here. Let's start looking at the market right now. Okay, I just got a feeling on dollar cat. Interesting trade. I don't know. It's an uptrend. I figured out a support, but looks like today is long covering drop basically happening. So it's very probably that I got to stop it out. It doesn't matter too much. I'm going to start with the analysis. Why? I'm going to start directly with dollar cat. Why 1.4320? It's a level for me. This is dollar cat weekly chart. This is an all high, I think, from the left. All lows, sorry. Dollar cat has been in an uptrend for a lot of time, mostly 2 years at least, nearly 3 years. We have some levels here to the left. This point 1.4320. Okay. So basically, we broke that level. Now it's testing from above. And now it looks like it's going to test the 140 from above. Anyways, what happens is that the oil is very weak. Oil right now it's going down. Today it's a pullback, of course, but it's 28 dollars per barrel. Okay, that's very cheap in relationship with what is we are accustomed to hear of oil, right? But it's very cheap, and this is mainly because a couple of reasons. Everybody wants the market share. Everybody's pumping oil and selling oil, even if they are losing money a bit or a lot, depending on how much it costs for you. So what happens is that the Canadian dollar is it's a currency that is pegged to oil a lot because Canadian economy it's very tied to oil exports and imports. So basically what is happening from a fundamental perspective, it's good to look a bit about the fundamental. It's that also the IMF sanctions of Iran that they just end in 2016. So Iran can sell oil now as normal, as a free market. They are pumping oil very cheap. Everybody's pumping oil. Also, the fracking thing. What is happening with the fracking? There is a new way of extracting oil, of pumping oil, mostly used in USA, but it's a very expensive. It's very expensive. So what happens is that the banks are financing these companies that are doing fracking. Okay, there is a lot of money on loans, big corporate loans to these companies that are financing fracking. So basically, if fracking, if oil is cheap enough, this fracking is not going to be profitable, and these banks are gonna have a very bad time getting their loans paid back. Okay, so keep an eye on that. This is a bit of fundamentals. Just keep an eye on that. Also keep an eye on the eastern countries, on Arabia and eastern areas that they are pumping oil very cheap. Also India is pumping oil. So this, everybody wants their market share. So this is affecting dollar CAD. It's making mostly the Canadian very weak, going up. But what happens is that we go to 140. When I see a trend like this, the first question I ask to myself is, I'm in or not? Okay, I'm not. Let's suppose that we are not. Then is where this may stop, where this can stop. So I look for places to stop. 145, it's a very big and important level, very psychological. Okay, so for finding levels, we need to look to the left to see what happens. I figured out 150. Okay, because I have made a webinar the other day, so I have the levels already. 150 is also a very good level for it to stop. But today, with the news and a bit of short covering, long covering drop, we have the drop already. I'm gonna buy at 140. It's a nice level, I think. I don't know. The market will show me if we reach that level. 140 is a level for me to go long retest. Okay. Then basically we broke 143.20 to the downside, and I expect a nice pullback these days. If 140 drops, I will do short below 140. I will do a stop and reverse. That means that I will get a stopper out, a loss, and then I will go short. Okay, this is dollar CAD basically. I'm gonna start with dollar pairs today. Guys, if you have any questions, I will appreciate, or any feedback, I will appreciate if you write on the chat. Okay. Thanks for that. So basically, we want to be buyers or nothing. The decision-making point is 140 right now, or a new high above 145. But if we break the 140 figure to the downside, we may expect further drop of the longs taking profits. So maybe a short term short selling, it's not a bad idea, okay? But not long-term trade because the trend is up, okay? I'm gonna go to dollar yen next. Okay, this is dollar yen weekly chart. I'm gonna put a weekly chart. Okay. So basically, we are inside these two range bound 123.74 and 116.070. Why I like a short here? I like a short here also if we break this level to the downside, 116, because it has been on an uptrend for a lot of time, and now the last year basically has been ranging the last year. Here you can see from here. This is the start of 2015, the vertical line. So it didn't move too much, okay? It has been on a range all the last year. This can be a distribution pattern. Okay, we don't know. We will know if we break 116 to the downside and we go lower. So also, I like that this is 125. It's a round number, psychological numbers. I like round numbers. They work pretty well. 125, sorry. They work pretty well. So basically, I'm gonna wait right now. We just has tested this level 116 today to the peep. Okay, we tested it nearly to the peep. We broke a bit and then reverse. So basically, you want to be aware of these levels. You are gonna have a little bit of noise. Let me go low to 15 minutes so I can see the noise. Okay, you can see this 15-minute chart. I think this was yesterday. Yeah, this was yesterday, the 20. So basically, it broke 10 pips. Maybe some of you went short and then completely reverse. This is a classic trade, a failure trade, okay, to the pip. You can do that in these levels. Okay, you can do that in these levels. Why? Because it's a very important level. It's a decision-making point. It's a level that everybody is looking at for. So you know the price is not gonna stay there too much. It's gonna either break to the downside or do a fails breakout like this time and then go back again. Okay, you can do that here on the lower end and as well on the higher end, because for me this is range already. The trend is over. Also, one thing that you need to have in mind is that this is very, we're going to talk about a lot of correlations. This is positively correlated to the S&P 500. Let me add a chart overlay. I think I can do that here. All right, so the white line is the S&P 500, and the other thing is the yen. All right, the dollar versus the yen. So you can see how it's dollar yen going down, S&P 500 going down. Big capitulation here, the dollar yen capitulate, range on dollar yen. Okay, so that's why I like a short in the next months if we break successfully 116 to the downside. Why? Because the S&P 500 is looking nice for a down move also, and we will be looking at it later. If not, I will just use the level to do my business there, either for a long side or for a short side. So this is dollar yen, guys. If you have any questions, I'm going to continue with the other pairs. You can write questions on the chat. There is a bit of delay. I can see that, but there is no problem. So basically that, and the targets for dollar yen, it's this area is a nice target for a pullback. 110, 105. Nice floor levels, okay, of accumulation. So gonna go back with the dollar CAD, dollar yen. Let's look at dollar Swiss. It's a bit like the euro dollar. I think I have some levels. Yes. The levels are done, okay, basically because we have the webinar the other day. So overall, what happened is that the Swiss franc is has been considered safe haven for a lot of time. Switzerland is a very neutral country, very stable economy, a strong economy. They have a lot of wealth they are like the safe vault of the savings of many people around the world that they put the money there. So it's very strong economy, very safe economy. They are neutral also. This is dollar Swiss, so this is how you can see how the Swiss franc is increasing in value. Okay, when this is going down means that the Swiss franc is increasing in value to a point that the Bank of Swiss National Bank did take some measures because it was hurting their economy. So now reverse to the upside, the trend is reversed to the upside. We lose the 120 floor on Euro Swiss. This is this big candle here, big red candle. Price completely closed the gap. all right, and then do a pullback and continue the uptrend. So basically, it's still an uptrend for me. Swiss franc is a bit pegged to the euro also right now. So if the euro is weak, the Swiss franc is weak. So the levels for me now is I want to go short a breakout below this level, 0.9785. We break it to the downside, I will go short with a small stop above, and I will do a stop and reverse also because it's a trend change point. It's the buyer's point of control. Okay. On the other side, if I want to buy, I will do only that above 1.024. Why? Because this is also the high of 2014, the last high of the uptrend. Well, it was just on January. It was the first trade of January, okay, 2015. So I will buy above 1.024, but I will not do a stop and reverse here, okay? I will just get a stopper out and try to buy again. Though, Joe, I'm going to look at the DAX and the S&P 500 also. And I'm going to ask the admin if I have 1 hour or 45 minutes also. I would like to know that. Okay. 96.28. I'm going to look at that, Joe. Let me finish with the currencies a bit. So dollar yen, dollar CAD, dollar Swiss has been done. I'm going to start with the pound dollar, pound yen also. Okay. I'm going to do Aussie dollar and Kiwi. Okay, this is Aussie dollar. I'm going to show you this. This is very weak. Okay, let me look at it, Joe. For me, it's a long entry right now. It's a long signal, okay, Joe? 96.28. For me, it's a long entry right now, okay? Because we break the similar to S&P 500, similar to dollar yen. We break this level, this floor, 99,347. I don't know if the pips match exactly or the ticks. We break it to the downside and then we are above. So it's a long signal. It's a buy signal already, but it's weak. You can see how the buyers are in 1 day, 2, 3, 4, a lot of time to go up, and then in 1 day, boom, they lose all the. It's like a war, like a battle. Okay, it's like a war. You want to be with the winners. So you want to be with a strong army, with a strong team. In this case, the sellers are the strong team. You can see how very easy. I mean, this a kid can do that. A little boy. You can see how price was unable to make a new high here. This is the point of control of the buyers. Okay, so if we break this to the downside or we do a failure, it's a decision-making point. I want to do business there. Okay. Now, just we have done the DAX. I'm gonna do the S&P 500 and finish with the indices. It's very easy because it's the same thing over and over. This is the S&P 500. My level trend change point here is 1,833. This is the decision-making point, and we have a fantastic trade today, I think. Yesterday, sorry. This is fantastic trade. You can go short the breakout here and then reverse, and it's one trade that happens very little times, but you can see how it works. It works perfectly because everybody is looking at that level. So this is a decision-making point. You can call it whatever you want, an area to make business. In the 1,853, you can trade short and then go long. Just need to understand the background, the music. Like it's going down with a lot of momentum, so that's good for a failure. Also, you know that it's not going to stay the price there too much. But I expect the price to pull back and then to retest again this level, the 1,833. If we break this, guys, with momentum to the downside, this can be a bubble, a small bubble, okay, because this index has been going up since the crisis 2009, okay. The beginning of 2009 is going up, steady, up, 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 up. So I will not go short right now, but if I have long positions on stocks or companies, you have whatever company, banks, Apple, or technological, or just do some hedging, just cover yourself, okay? Take some cover, because shit can hit the fan, like they say. So take some hedging, do some hedging on your trades to cover your positions in case that this breaks to the downside and all the longs just chicken out and close. Now that the indices are done, I'm gonna go with continue with the currencies, with the Australian dollar versus the American dollar. So this is Aussie dollar versus Aussie versus American dollar. Very interesting downtrend, not very clean at the later states. Right now it's a bit ranging, but has been going down steady. So basically, again, when I have these questions, what I do is ask myself first where this is gonna stop, where this can stop. Two, where can I jump into the bus? And three, when this gonna change. So the first thing where it can stop, for me, this is a very, very nice area because this is the origin of the rally. Is the stop where the downturn from 2008 stopped. Okay, stop it here. So the levels are clear for me. We want to go short a breakout 0.67. We want to do that. And also we want to do a short failure on resistance at 0.73. Oops. Better say we want to go long really. Okay, but with a very tight stop. If we get a stop it out, we will go short. Okay, guys, it's even better. I will go long small with a small stop. I will go long, but in the moment I get stopped out, after it goes above, you can give 10, 15 pips. If price breaks above 15 pips, you go long. If then comes back below the level, you go short as crazy. You close with a loss and reverse because it's a failure trade. Okay, so this is Aussie dollar. The levels has been from the low of the crisis 2008. This is a decision making point again, 0.16. Keep an eye on that. That's a decision making point, 0.60. And then the other levels are 0.67 and 0.7385. This is dollar CAD, guys. Dollar, Aussie dollar, sorry. Yeah, I don't know, Joe. I don't know, really. I don't know, really. I appreciate your feedback. If anybody wants to ask any questions, go ahead. Okay. Wow. Wow, wow, wow. Dollar CAD is having a nice smash down. Nice volatility. So now we have done Aussie dollar, and let's do Kiwi dollar. Okay. 62. This is from the whole webinar. It's a losing trade, in fact. So this is Kiwi dollar. It's a bit, let me go back to quickly. So it's a bit, looks stronger than the Australian, looks a bit stronger. It's already making a failure to make a new low here. So this is the point of control of the sellers, 0.6896. So what we want to do here is a long. Sorry guys, it has been a very long day. With a stop and reverse, of course, because it can be just a trap to pick up the trailing stops of the sellers. So 0.6896, keep an eye on this level, very important level. And then the same things applies here at 64.24. It's a bit late because the trade happened a couple of days ago. 64.24, I think. On reverse. Why on both sides? Basically because prices are like narrowing a bit. Looks like they want to narrow. They are narrowing a bit. Okay, fail to make a high here, fail to make a low. They made a low, but then come back up fast. So looks like the fair price is the balance around 0.67. 0.67. If you want to go lower on time frame, there is a level here 64, but I don't recommend to you, a lot of noise. But you can try with a small stop. That the price will go back to the middle 64, or you can do 65. It's a big round number, it's better. 0.65. And this is Kiwi dollar. Now we are gonna look at gold, that is very similar to Aussie dollar. Okay, and then I will look at the currencies, euro and the pound. So this is gold. Let's see what we have from the old webinar. I cannot see. So this is gold. I'm gonna go back to weekly. So gold has been on a bubble for a bit of time. Has been on a bubble for 100 years nearly. Basically, we broke the 1,533 level here. Start of the movement down with a lot of strength, with a lot of momentum to the downside. Very strong movement down. Now the price is stalling a bit. There is this key psychological level, the 1,000. Very big psychological level, okay? But now price is stopping a bit here around the 1063. Around this area we found some support here. Price just broke this low that was made on last summer. We make a low, this is a weekly chart. We make a low here, 1071. Do some pullback, fail here to reverse the trend to the upside. This is the point of control of the buyers, the 1160. And now we are basically back to downtrend and now back again to the middle. So it's similar to Kiwi dollar, because every time price make a new low or new high, it's going back to the middle. Okay, so for me, I will not touch gold right now. I'm flat. If I do something, I will do a breakout above this high. If I will go short, I will go short below this last low here. It's pretty simple to trade trade in long term. It's pretty simple, not easy, but it's pretty simple. So I will do a breakout here to the upside of 1113 with a stop and reverse, of course. And I will do a short breakout below 1046. I will not do a stop and reverse here because the trend is to the downside. Okay, this is gold, and the profit target for the long here is around these two, between these two yellow lines, or at least trail your stop, because we don't know if this is gonna break to the upside or just reverse like it has done the last time. Okay. Any questions on gold? If not, I'm gonna continue. Mm, mm, mm. Wow, the markets has been very crazy today. Okay, let's continue with the euro pairs finally. This is very similar euro dollar, very similar to dollar Swiss. So basically that is. Um, Last year has been mostly on a range. We have some sell off here, but then range market, very nice failure trade here above 115, and then back to the middle. So basically, we are at 108.25 right now. Um, the fundamentals are bearish. Of course, we know that the ECB wants a weak euro. We know that. Um, it's a strange trade right now because for me it's just starting to get a bit range mode. Okay, price is not making new lows, it's not making new highs. So it's gonna be very clean trade here for me. If we break outside this box, oops, the 110. If we break above this level 110.40, I will go long. With a stop and reverse. Okay, I consider this to be more weak, more downside than upside, mostly because the fundamentals. So I will go long here, but I will reverse if the prices are unable to continue to the upside. And then for going short, I will only go short if we make a new low below 1.045. Okay, this will be the short breakout below 1.045.6. I will not do a stop and reverse here first of all because I will like if it comes back again, I will like for a pullback again to the level to buy. Okay, I will not reverse immediately. Because for me this is an uptrend in a weekly chart. It's still down. On daily is more range mode, but this is basically the euro dollar. What we can expect is, I don't know, maybe this year we reach parity. Maybe no. Parity level has been like on the books for many time, like everybody the parity, parity, parity. So that makes a hard trade. Because if everybody is expecting that, then it's not going to happen. So we don't know. Maybe we break the lows and we make a new low and test the one. Maybe we test 115 to the upside again and we repeat this behavior. So I will be very careful of these levels. 115, very important level as well. So I see there is no questions on the chat. Okay, that means that I'm very good explaining things or you are very smart, maybe both. Who knows? Okay. So basically that's euro dollar. Let's continue euro pound. Oops. Okay. Okay, okay, okay. So basically we broke finally out of this level, 0.7482. Okay. Finally, we broke below that. And guess what? We come from a failure here Look at that rally from 0.7. We break this momentum low from the downtrend, boom. Then rains, it happened at once, then it happened at two, the same behavior here. You can see that. Now price boom to the upside, 700 pips. That's a lot for euro pound, okay? 1 pip on euro pound equals to 1.6 pips on monetary terms on euro dollar. So it's a lot for euro pound, okay, from 0.7 to 0.76. So basically now we reach this 0.77. Now today's selling off mostly for news because the news, but to be honest, the pound is weaker than the euro right now. This is an afternoon on euro pound, sorry. We will be looking at pound dollar also. So we find this level, it comes from this low 2008. So the question is now where I can buy, where can I go long euro pound? Uh, it's a good question. I'm gonna check some levels here. This is not a bad level. It's not the most perfect level, but it may work this high at 0.759. Mr. C is asking a good question. Um, is asking when you enter long if a level is closed above within a 15-minute, 1 hour, or 4 hour candle. He's asking me if I wait for a break, for a close of the candle. No, I don't wait for any close. I just put the stop, the entry, and that's all. What I do is that I put a 10% range of the ATR. That means that, for example, I go here. Let's see how much is the ATR of the pound, euro pound. 1 sec. So it's 70 pips. The ATR of pound Swiss of the last 10 weeks is 70 pips. So what I do is the 10% is 7 pips. It's 7 pips. So if I want to do a breakout above this level, for example, I will wait for it to break 7 pips. That's the 10% of the range, of the average range. If we break 7 pips above or below the level, I will trade it. Okay, that's the formula I use. I don't wait for the candle to close. Okay, and then I use do the contrary for the reversals. That's basically what I do. So I put a measure of volatility above and below the levels I want to trade. I don't wait for any candle. You can wait for the candle close, but your stops are gonna get bigger. Okay, are gonna get bigger. It's okay. You can do that. Very probably you will have more hit rate, but you will have a lower risk reward. Instead, I have a lower hit rate because I have a lot of more stop losses because I'm not waiting for the confirmation of the candle close. But when the trade is right, my stop is very small, so I can make more. It depends on your personality, Mr. C. If your personality it's okay with drawdowns and with being wrong, then do the small pips above and below. It doesn't matter the candle. If you prefer to be safe, then wait for the candle close. If you are trading long term, you can do 4-hour daily candle. Okay. Josh is saying that maybe 76 and back up. Yeah, that's the goal. I want to buy here at 76. Just you have my words out of my mouth. Okay, I'm gonna explain it back very easy, Joe. 1 sec. Ah, my God. Okay, what I do is basically put a measure of the volatility. I measure the volatility. There is a web page, very simple. It's called mataf.net. Okay, you go here to tools and click volatility. So what I do is I have the volatility of the last 10 weeks. Okay, I see how many pips the pair I'm trading move on the last 10 pips. So in this case, euro pound moved 70 pips. round number, 70 pip. So what I do is I take the 10% of that number and add it to my levels as a cushion, okay? As extra range. I don't go directly when the price touches the level. I go when the price goes above or below the level 10% of the ATR of the last 10 weeks. Okay, it's a bit strange maybe. Maybe it's a bit confusing, but it's not. It's just using 10% as a cushion. So for example, if in euro dollar the range is 150 pips of the last 10 days, I will use a trade, I will wait for 50 pips breakout. Okay, so if my level is to go long above 110, I will go long at 110.15. That is where I go my entry, my breakout. Yes, mataf.net is where what I use for volatility, but maybe FX Street, fxstreet.com have some volatilities. Very sure, maybe I'm very sure um, that they have the volatility also. Yeah. Okay, you can use both. Volatility table. Here it is. You go to technical studies, fxstreet.com technical, and then you go to volatility table. So you can use the volatility of 3 months. It's good. Euro dollar is 95 pips, so I will wait 9.5 pips for the breakout to happen. You can use both. Okay, great. Then move on. So basically, guys, buy retest. On the retest, I try to buy as near as possible. Okay, you can apply the same thing many times. Price is not gonna touch directly to the level. Okay. Yes, exactly. I think I posted the link. You have it on FX Street. Joe is asking. Let me see if I have it clear. One sec. Mr. C. Okay. Joe is asking, is this some bank trading strategy? I don't know. I'm not working in a bank. Um, but basically, they use some volatility strategy for sure. Volatility is just measuring, having the measures, like, okay, how much room to give. I'm not gonna know 10 pips. Why? You need to have some rule that makes sense. If the price is moving a lot, then you need to add more room. If the price is moving very little, then you don't need to give it so much room. Do the banks do this? Very probably. But I think the banks have like mixed strategies. They have a long-term strategy with no stop loss. They buy and then they buy more and then they buy more and they buy more. They do averaging for long term, depending on their clients. Yeah, and then they do a small intraday time frame trades, for example, at 0.8 to 0.050. They do, sorry, 5 minutes, they do a small breakout of the range, for example, with a very, but this is more algorithmic trading. They do this, not every bank. Okay, so they mix strategies. Yeah, volume weighted average price, many things. You can do many things. Depends on the bank as well. Some banks, they just do the hedging of their clients and it's over. Yeah, Joe, of course. Yeah, of course. Okay. So basically that's euro pound by retest here, 0.76. Breakout to the upside. If you want to be safe, you can buy the new high at 0.775. Or you can buy the breakout of 0.77. This is a bit more aggressive, but at the same time it can give you some room if the price to wait for the price to test the high of the momentum high. Okay. This is euro pound. Let's move on to euro yen maybe, and then pound dollar, pound yen, and then we're done. Um, and going fast. So this is euro yen. Is looks like the yen is stronger than the dollar right now. Basically, for me, this is clear, right? The levels are so clear. Look at this. It's looking good for a short, guys. Long-term short, the kind of trades that makes you the payment of the year to buy a house, to buy a car, to buy something, right? To buy food, depending on your size. So if the breakouts happen here, guys, go short and don't look back, never ever. Let it ride. So go short below 126.0.80, 126.0.80. The fundamentals are weak for the euro, and for the yen, we'll see. Yes, it's so oversold the pound dollar. I'm gonna look it in a sec. So basically, this is euro yen. Stop and reverse here. You can try, but the trend is to the downside. I will not recommend that. Okay. Be aware that there can be some noise here on these big levels. Then for a short-term rally, I will like to go long above 130. It's not a bad level, but just for a quick long short term. And then obviously a stop and reverse here. Why? Because the trend is to the downside. Here we want to go short really also. Okay. If price then the series change to the upside, I will be still looking to long only. So this is a sell area, basically 130. If we break out to the upside, then reverse. Targets, it can be 133, 137. This is Euro Yen, okay? It's noisy, but maybe you get nice movement like this. This is 700 pips, okay? Not in many time. So euro dollar, euro yen, euro pound is done. Let's look at pound dollar and pound yen, and we are done. Okay. Not this one. Okay, my platform is a bit. One sec. Too many things open. All right. So basically, pound dollar, Joe is saying it's oversold. Yes, it is for a reason, right? Nobody want it. Nobody want it. But now today is getting nice pullback. Some sellers got caught, in my opinion, here. I'm gonna put a weekly chart and try to have some perspective here. So basically, pound dollar has been on a range, narrowing range here for a lot of time since the crisis. We have a small side breakout of 170, and then it was a joke, and it was the beginning of the downtrend. Now some pullback, and then a new leg to the downside. So this is a downtrend. Okay, this is technically speaking a downtrend, no doubt about it. But there is a level here, 1.41, 42, one sec. 1.4229. So this is a good time to do some pullback here, to do some short-term rally. Okay, guys, but it's weak. It's weak. Don't get me wrong. Yeah, everybody's short, but that's the reason that week this can pop up a bit up. Do a pop up at least for a new place to go short. So if you are aggressive, you can try to go long, or if you are short already, I will recommend to trail your stop aggressively, because you can get nasty things to the upside here very quick. So pound dollar is short. I want to be short. But if we break this level 143 to the upside, I will go long with a stop and reverse. The clean and easy trade. Here. Okay. 1.43. If you gotta stop it out, then go short again. Okay. Levels to add to the downside. Very clean level is 145.67. Retest. This is very easy job to do. Homework. Why? Because this was expensive once. Now the price broke. This is a psychology shift. Price broke. So next time it may be expensive. I mean, yeah, this was cheap. Change in the mindset of the traders who broke it. Next time we test it, it may be expensive price and the guys will go short. This is the pound dollar. If you want to go short, even if it's oversold, I will do it below today low, 140.50. With a small stop because it's very oversold, as you said, Joe. The levels the next level is 135. It's very good. We have a very good room here to the downside. Okay, nearly 500 pips. Yeah, something like that. Very good trade. If we break successfully to the downside and test the crisis low, and after that we will need to. I mean, I don't have any data below that. I have data from 1993. This is maybe the lowest price the pound dollar has been. I will need more data. Okay. Maybe not, but it's a critical level, 135. Okay, this is pound dollar. Any questions? I'm gonna go to pound yen and then let's call it a day, guys. Great. And Joe, if it's oversold, it's okay. You can still go short. The question is, do I see at 140? Yes, I may see at 140, but I will like a pullback first, to be honest, because it has been very weak for 1,800 pips. Pound yen. Nice short, very probably. Whoops. This is intraday chart here. This is pound yen. You can see the drop, fantastic drop, and you can see the wave. You can see the music. If anybody can see the music, anyways, something strange, right? To see music. You can see that the waves of the ocean how change. Very. I mean, you can use this chart to train your child how to do trend reversals. Or your brother, or your little brother, or your friend, or whatever. Why? Because it's perfect clear trend change. Art, guys. Pound yen is going up. Yen is selling, is doing the weak policy of the yen going up. We break 190 psychological point again. 190, a little bit of trouble, momentum down for 3 days. Look, in 3 weeks, they win 1, 2, 3, 4, 5, 6, 7, 8 weeks lost in 3. This is a change in behavior. Yes, this happened here once and 2 and then reverse come back, but then we break the point of control. Is 180. 180, it's broken to the downside and now it's a massive leg down of 2000 and nearly 500 pips. So I'm bearish. That's how it is. But a pullback out of this is not a bad idea, you know. And you can see the levels to go short. Very easy, guys. This you can train to your kids also. Just be sure to do some hedging to them. Oh, yeah, I breakout. Sorry, I was doing 3 times. So 3 things at the same time. So the retest here at 175 to 55 to 55. Retest here. Okay. If not, I mean, you can try to reverse here to 180, but I will recommend just do the longer reverse in the 180 because this is the point of control. So short retest at 180. with a stop and reverse here. Yes, here we want it. Here we want it, guys. Short retest at 180, 360, and if you get a stopper out here, it's a good level because it will be a continuation up to the upside. So basically, this is pound yen. It's weak. We want to go short, and now to go long, I just changed to the daily chart. Let's find some levels for a short covering, maybe a short covering rally. If you want to be more aggressive, okay, because this is swing trading now. This is not trend trading. If you want to do a long above 168, in case that this wants to pop up a bit, do some popcorn at 168, round number. Oops. That is more swing trading, but if you get a stopper out, don't forget to get back on the train. Okay, 68. So this is basically this is pound yen. Any questions? This long is for a small short covering rally. The shorts close and it goes up. Okay, if there is no questions, I'm gonna talk about my services for minutes and I'm gonna call it a day. I'm running right now 3 services myself as a trader. I'm trading clients' money and managing money through a PAM accounts, long-term trading, very relaxed, very tranquil, automatic, okay, completely mechanical system. If you are interested in that, welcome, be welcome. Second, I'm opening a live trading room. Okay, you can be, there is 1 week for free, then it's 49 a month, very easy. Okay, that is another service, and the third service is the mentoring one-to-one. So guys, these are the 3 services I'm doing right now as a trader and as a coach. So if you are interested in anything about that, just contact me through Skype. It's the preferred manner to do that. My Skype is CoreFX, right? You can contact me anyway to ask me anything about the markets, about what we have talked about today, about the markets, about any idea, anything you can ask me. Feel free to do that regarding the markets or regarding my services. Okay, so guys, I hope you like today's webinar. I hope we have a fantastic 2016 year. I think it's going to be fantastic. Okay, and basically watch out for the volatility, it's racing, watch out for the bubbles on the indices. Basically that. If there is no more questions, I will close the room. I will stop my webinar in 2 minutes. I'm gonna wait 2 minutes for the questions. You can write any questions now. Okay. Okay, no questions. Okay, everybody, then you can still ask me the questions on the Skype. Okay, CoreFX is my ID. So guys, I hope you have a fantastic day. Thanks FX Street for having me here. Thanks everybody for being here with me today. Have a fantastic week and a fantastic year. Control the risk, trade safe, and regards everybody. Okay, Josh, dollar yen fast, very fast. Very fast. No, 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 no. Is short here. It's a short below 116 with a stop and reverse, and the same here to the upside because it's on a range. No, I don't use Donchian channels. I don't use that, Joe. Thank you, Mr. C. Thank you, Josh. I don't see the people. I would like to see the how many people is in the room. I don't see that. Okay, I can see that now. Thanks, Fabian, Josh, Marco, Soulfood, Joe, John, Nat, Mr. C, Goldie, Mauricio, Adinda, FX Street Team. Thanks, everybody. I'm closing the room right now. See you on the next webinar, guys. Bye bye.